Okay, so after we talked about a ranging market, supports and resistances, and some useful indicators, now it's time to talk about trending market. As I said before, in a trending market, every price increasement reaches to a higher top than the one before, and every drop stops higher than the preceding this line. During a trend, there is one side which is more dominant. In an uptrend, what happens is that bulls are in control, bears might try to stop them, and we can see some this lines, but then bulls come in again even stronger. And this time more people come in. They know that the direction is upward and they take advantage of the pullback in order to get in a lower price. Another thing is that the general approach is different, in opposed to range trending where you want to buy when the prices are going down and sell when they go up. In a trending market you usually want to join the current direction. You buy when prices increase and you sell when they go down. As you already know, by looking at charts we can learn about buyers and sellers' actions. Every bottom during a price movements tell us where sellers got weaker and buyers gained control, while every peak shows us where sellers took control over buying powers. If we connect a line between two nearby tops or bottoms, we will get to see the lowest, or highest if in a downtrend, common denominator. Such line is called a trend line, and it helps us in identifying trends. It also tells us about the direction of the trend and the strength of it. Trend lines is one of the oldest tools, but it's still one of the most efficient ones. So let's learn how it works. When the prices go up, you draw an uptrend line by connecting two bottoms. In such case, you will look for buying opportunities close to this line while putting a stop loss below the trend line. During these lines on the other end, you use two tops and look for selling entry points. A protective stop should be then placed above the line. By the way, in case you are not sure what stop loss is, then a stop loss is a level that when reached, closes your trade automatically in order to protect you from higher losses. We will talk about it in more details in the money management section, so don't worry, you learn what you need to know. Now we will talk about how to draw a trend line. In opposed to what most people will teach you, you don't necessarily draw a trend line by connecting the two recent extreme points. It's always better to look for levels where the price was going through more times. And if possible, around opening and closing prices, it's even better. The reason is that one extreme price only tells you there was one particular trader who was willing to trade at a certain price. And it might even happen by a mistake. While what we want is to learn in which areas most trades took place. The strength of trend lines is determined by a few factors. First of all, there is the time frame. The longer the time frame, the more significant the line is. A weekly trend line is more important than a daily trend line, which is more important than an hourly trend line, etc. The length of a trend line is also an indication. Don't forget the chart represents mass behavior, and the longer this behavior continues, it tends to proceed even more and get strengthened until proven otherwise. Another thing is that we are looking for trend lines in which there are many contacts as possible between the price and the line. And last but not least, there is the angle of the trend line. A steep trend line shows a quick and strong momentum, but also one that is not expected to last long. A very shallow line on the other end is going too slow and rarely provides us with interesting trading signals. Usually the lines that are around 45 degrees are the ones that serve us best. They are strong enough, last for long, and give us good entry and exit levels for potential trades. Look at this chart. We first have this high from the 5th of March. The price went a bit lower and then tried to climb higher and was stopped here. This is not necessarily enough in order to create a reliable trend line, but what we can do is to start drawing a potential trend line and then adjust it later on if needed. And look what happened here. This strong red candle that didn't even try to rise higher above our line is a good confirmation of the downtrend line. Then the price was attempting to upbreak it few times but failed to do so. Even here, there was this one candle that was able to violate the line, but it was quite small and with a very low volume. In order to really break it, we needed another confirmation that didn't come. Instead, we see this small indecisive doji and then this violent bear candle that leaves no room for doubt. In those areas, there were several more opportunities to get in with sell orders and make profits. Eventually, we have another attempt for a breakup, followed by this neutral candle. Only this time, the following candle and the one that comes after confirm that the line was broken. And now it's time to remind you that once a resistance is broken, it tends to become a support. And indeed, look how nice it worked here and here.